Hello. Hi, everyone. Hi, James. Just testing. Can you guys hear me? Hương, can you hear me?
Oh, sorry. Yes, I can hear you.
All right, loud and clear.
Yes.
Cool. I guess let's do a quick test with James and Dias once they are ready. All right, it's about 7 p.m. Here in Vietnam time, or 8 p.m. in Singapore, or about 12 in GMT. I guess give us a few minutes. We're waiting for one of the guests, Darius, as well. So please give us 2 more minutes. All right, cool. We got James, we got Darius. A quick test. Can you guys hear me clearly? Loud and clear. Darius, you can say something. James.
Hey, Vin. Nice.
Hello, I can hear you loud and clear. Can you hear me?
Same here, same here.
Yeah.
Same for Darius as well. I think it's about time to
Okay.
To start then. So we got our technical support. They're available for any technical questions or any challenge you have. All right, so let's kick off. Hello and greetings from wherever you are. Welcome to the second edition of DBOE Forum. I'm Vin Vu, the host for today. I'm stepping in for Jonathan, who couldn't make it. Before we introduce our guest, let's begin with a brief disclaimer. Everyone, please read through our disclaimer and make sure you understand and accept it before continuing. If you're not happy with the terms, please discontinue. Sorry to see you go. So I pause here for 15 seconds. I'm counting. All right, I think we are good. So with great excitement, I would like to introduce our guest today. Our first guest, James Harris. James boasts an impressive professional journey, having held key positions at esteemed financial institutions like Citi and Standard Chartered Bank. Transitioning to the blockchain arena, he co-founded a digital asset management and custodian venture in 2017. After a successful exit, he has taken on various leadership roles, including a current position as Chief Commercial Officer at Zodia Custody, the crypto subsidiary backed by Standard Chartered. As some of you may recall from recent news, James also graciously agreed to provide advisory expertise to DBOE, an honor we greatly appreciate. Our next guest, Lonappan, is currently serving as a Chief Technology Officer at SilverBullion Group. He brings with him a wealth of experience from his previous role as a CTO at Chase2.io in the crypto industry, where he earned recognition as a prominent crypto enthusiast and a strong privacy advocate. Prior to his time at Chase2, Darius also made substantial contribution to a notable crypto startup, which was listed among the top 8 crypto fintech startups in Singapore in 2018. Welcome, James and Darius, to the second edition of the DBOE Forum. Please have a few words.
Thank you, Vin. Absolute pleasure to be here. So as you mentioned, I'm James Harris. I'm Chief Commercial Officer at Zodia Custody. Zodia Custody is a leading digital asset custodian that is backed by Standard Chartered, SBI Group, and Northern Trust. We are institution and regulation first, based in the UK, Europe, Singapore, Hong Kong, and Australia. I'm super proud, though, to be an advisor to DBOE, and I'm very happy to be here today.
Thank you, James. Darius, please.
Yeah, hey, thanks, Vin, for inviting me here. It's a great pleasure to be here as well, and to speak with you and James as well. So I'm the CTO at SilverBullion. SilverBullion is basically like one of the biggest bullion dealerships in Singapore, and we have what you call a custodian of wealth at Singapore. So we're building the largest silver vault in Singapore, which is at Changi. So we can store about, like, I think one of the world's largest vaulting space for silver. So that's what I'm working on right now. So it's quite interesting, and there is some, we can catch up later on what's on the crypto space there. Yeah.
Yeah, thanks again for joining us today. I know for James, we are just between you and your lunch. I hope you had it, because it's noontime over there. And for Darius, probably we are just after the dinner. So James, feel free to have bites if you're not. We wouldn't mind at all, unless it's too yummy or tasty. And we promise to keep it short but informative. So we structure our session today into 3 parts. The first part, I ask questions to understand you better, for basically for the audience to understand you better. For the second part, I also ask questions, but the questions is meant for two of you at the same time. So this is to give a different perspective to the audience. And for the last part, we open it for the audience to ask themselves, if we still have time. And I hope there's no such things as a shy crypto community. Okay?
I've seen the DBOE people on Twitter. They're not shy, so it should be fun.
They are not. So without further ado, let's jump straight to our first part today. We all know custody is very fundamental to any users, be it a small users or an institutions. So for the benefit of the wider audience, can you give us a crash course on the different custody solution since the dawn of crypto? Maybe I go. Maybe guys, you go first, and then James.
Yeah, sure. So, like, talking about crypto custody solutions, I think I'm quite familiar because, one of the things, like, we actually even came up with our own crypto storage standard back in like 2017 or something. It's, I can send the link later. It's quite interesting. So, for myself, like the crypto storage journey started with having my first Trezor. It was like the first hardware wallet that I had. Prior to that, we used to use paper wallets, and then there was some exploits on the paper wallets, so we stopped using that. But that used to be the most secure one. I mean, so funny story. I once like when the crypto ATMs came out in Singapore, I first printed out the QR code and kept it in my wallet, and then it disappeared. I thought I had the Bitcoin, but it's thermal paper. So that was a bad one. But like in general, like paper wallets were a good solution. So one of the ones that I worked with, we actually etched laser QR codes onto plastic cards. We found that to be like the best one. So that's something that we actually did at SilverBullion, right? For custodying Bitcoin for people. This was back in like 2017, 2018. And we came up with like a paper on how to do it and all that. Yeah, so those were the the paper, laser etching, metal etching solutions that we had. The more software centric versions came out a bit later. I think around that time as well. It's like the multi-sig, right? So a lot of stuff started around with having multi-signature options, which was the kind of like a turning point in terms of custody, right? So even for us, so we like together with another founder, I operated this Bitcoin brokerage. So there, what we used to do was have a multi-sig wallet offline, right, and multi-sig wallet to keep the Bitcoins, so that that was actually like the more practical solution, right? Instead of having an air gapped. So during that time, we also had air gap wallets. Like we'd have a Raspberry Pi, in which we would disconnect it from the internet and move tokens. But then we found that having a multi-sig was faster, more operational. So those are the two kind of approaches that we had. So air gap wallets, hardware based. We used Armory for that back then, and then multi-sigs. And then with the multi-sig, they came more institutional ones. We had like Bitco custody. Bitco was one of the, I think, the first few more institutional custodian solutions. So they had they also used a multi-sig. Basically, they were one party to the multi-sig, right? I mean, and I think their services have improved since then, but that was like the early starting point, right? Then we have moved on to like like when Ethereum came out, they had like smart contract based ones. But if you remember, like Ethereum smart contracts couldn't do like how Bitcoin did. So Bitcoin multi-sig, if you guys know, it used to be like it's part of the scripting language, so it was like much more efficient, right? So back then there was no concept of what you call threshold encryption. Threshold encryption means like if like it's like every person has to broadcast on chain the smart contract function, right? Which is how it used to happen in Ethereum. So we used to have the Gnosis safe, and version 1. Everybody has to sign and broadcast, and it was like a lot of gas, right? So I think another turning point came with the advent of like threshold encryption and a proposal in the safe to kind of create a version 2 with the threshold encryption, meaning like it's similar to Bitcoin, like you just need to have all the signatures in place and then you can create a transaction, right? And that was a big turning point as well. And I think the safe is one of the largest multi-sigs right now. I'm also to say I'm a delegate at the safe. So yeah, so interesting journey in terms of where we are. Over to you. Yeah.
Nice. So yeah, interesting journey. It's funny, getting into crypto officially in 2017. I felt I was so late to the game. And I don't know if you felt like that, Dias, but certainly when we were building our custody solution, I really felt, oh my God, you know, there's firms here like BitGo have been around for ages, but really on the institutional side, crypto custody since dawn, if you will, the evolution has been rapid, especially when you think about how slow sometimes institutions can move. So up until 2014, which is, you know, I think BitGo was founded in 2013, but from about up until then, we saw that most of the people, or speaking back to people who were operating then, one, there were no institutions really. There were a few funds, but mostly it was people, and self-custody was the only way. Right, BitGo started to offer a service, as you say. They had they would take care, and they have there'd be one part of the multi-sig version, and they had a proto version of that. I think that was their own technology. So I think Gemini began to offer delegated custody as well from 2015, 2016. But really, institutional grade players only began to emerge properly from 2018. So 2018, you had guys like Fireblocks come out, Copper come out, Komainu come out, Anchorage was 2017, those kind of names. All of the big sort of institutional names that are looking after digital assets, they were beginning to come out, and you could separate them into two groups. You had the technology providers, like a Fireblocks, who effectively weren't regulated as a custodian, but would help institutions and people effectively store their assets safely. But you're effectively, even whether you knew it or not, but hopefully you would know, you're effectively self-custodying insofar as you have a responsibility of storing some of the seed or your signing is effectively the binding thing. And then there are fully delegated custodians. That's where there's an effective title transfer change, which is made to the custodian. So effectively, the custodian then holds the assets, albeit on your behalf, and they will store the keys, and you will fully delegate your decision making to them. But if something happens to you, then in theory, nothing happens to your assets. So that's sort of how you can split them up. The big delegated guys outside of BitGo and Anchorage probably started coming out a little later. So Zodia Custody, we were founded in 2020. Coinbase Trust, I think, launched quite late as well, relatively speaking. There's a funny story there. Maybe I can get into it a little later. And really, these guys sort of differentiated themselves and ourselves by being fully regulated, compliant, and they have insurance. Some of the technology providers do as well, but it's a slightly different proposition. And that's really what the ecosystem looks like now. There's a lot of evolution and iteration still happening. But if you're an institution these days, you've actually got a dearth of things that you can choose from, a lot of things. Whereas back when I was starting, I really thought, well, you know, if you're an institution, you know, my company was initially a fund, and I just couldn't find the right way to custody it. So I thought, okay, there's still chance here.
Well, thanks for sharing. Yes, it's truly an evolution by itself. So I want to continue with James. I'm sure some of the audience have studied your background, so these questions might resonate well with them. And you obviously were very early in this space, custodial for institution. You started your own venture and successfully exited. Can you tell us what it meant? I know you just share a little bit, but can you tell us what it meant to start off such services during those early days? Challenge, I imagine, is like fighting insurance. Who can insure a very new ops process, right? Like that, it benefits our community a lot. So
yeah, thanks, Ben. It was a really interesting time, for sure. And a huge learning curve for me. Like I'd already gone down the crypto rabbit hole, you know, sound money, that sort of thing. Gotten my head around decentralized computing and that kind of stuff, and then diving all the way into storing assets was quite the way. It was quite the learning curve. And so I remember as I was sort of considering the pivot from fund manager to custodian in very early 2018, I went to a conference, a very large one. And I met a fund manager there, and I was sounding out my idea, and I said, so, and I think he was looking after 20 or $30 million or something like that, which in 2018 was a fairly big fund at the time. That funds are bigger now, but and I asked him, so tell me, how are you storing your assets? And he said, oh, I keep them in a ledger. And I said, okay. I understand. Where's your ledger? It's like, oh, it's in the hotel. it's in the safe. And I just couldn't believe it. I was just like, wow, okay, so I'm not that early after all. Like the fund manager in question, he knew his stuff. He knew that that wasn't the best way of doing it, but equally, you know, he had to manage his risk, and he was off trying to raise capital. And if he's the only fund manager, these are the things that he had to do, given the technology that was available at the time. And so that really sort of inspired myself and the team to think that actually we can create something that's a little bit more secure than that. I'm not knocking at all on ledgers and Nano. I have them myself personally, and they're fantastic. But if you're looking after someone else's money, you take on the fiduciary risk attached to that. You need to have a slightly different way of thinking about it. So there was a lot to solve. Obviously, the technology was something to solve. The regulatory piece was interesting. There was not much regulatory clarity globally at the time. I'd say that there were some jurisdictions that were more progressive than others, and they tended to be the smaller ones. So had some regulatory questions to solve. But I think insurance was one that I spent a lot of time on personally. So back in 2018, almost all of the insurance policies were bilateral. So what I mean by that is that if a venue or a custodian got hacked, there was an insurance policy, but the insurance policy would pay the venue. And that's not a great outcome for users, because ultimately, if you think about it, if the venue goes under and assets are lost, okay, the insurer is paid out to the operator of that venue, but then the money just goes into the stack and it has to be paid out to all of the creditors in order, right? So the actual asset holders weren't protected directly in that way. And so as I was going up and down Leadenhall Street, which is sort of where all the major insurers are in London, I wanted to try and help the industry get a multilateral insurance contract, whereby actually you could protect the client's assets, and if there's a loss, pay the clients out directly themselves, and circumvent this whole junior, senior, subordinated debt type issue that we had. And actually, I think one of the things that my firm managed to do was persuade underwriters that this was a risk worth writing, and also get third-party insurance, which alongside then BitGo and those kind of guys all exploited in a big way. But that was probably one of our gifts to the industry. And I think that if you look at all of the policies these days, that's what they look like. So that was quite fun. Yeah, I think, you know, if you think the regulation's confusing now, back then it was just so fragmented. You had guys like Gibraltar saying, look, we've got this whole holistic framework. And they said, yeah, okay, but it's Gibraltar. No disrespect to them, but, you know, smaller regulator, obviously trying to carve out niches. But now we're beginning, you know, now actually the regulatory picture is as clear as it's ever been, I would say. The US is beginning to coalesce into a strategy. Europe has got MiCA coming out, which is fantastic. You've got really, really progressive regulatory frameworks in like the UAE, you know, and so it's actually a really good time for an institution, because you can begin to see how you could actually play in the space. So what drew me to digital asset custody is that at the time, and this is where it's interesting, is like, why would I want to set up a custodian? I believe that one could have the trade stack, so have the custody piece, and then build services on top to create a fully vertically integrated financial services company. That was super exciting to me. But then I realized that the corollary of that was that effectively people would give custody away so that they can offer services higher up the stack. And then for those companies that are offering just custodial services, they're going to struggle. So that's why I then exited the business. I went off to do something else. I did for a while, and I came back to custody late last year. And everyone who knew me asked me why, and I said, well, because after FTX blew up, and the big construct of having a vertically integrated financial services firm in crypto blew up, basically. People realized that you couldn't have all of this counterparty risk sitting with all of these with one firm like FTX, right? Where they do custody, trading, borrow, lend, all those cool things, right? And it became clear to me that actually the market, especially the institutions, would need pure play providers of financial services like custody. And that is why I decided to to return. And Zodia custody is actually a really nice place to do that.
Thank you. Excuse me. Thank you, James. Thank you, James. I think what you shared about the guy or the friend, they put the ledger at a hotel, right? It resonated quite well with me because it reminded me one incident. I was traveling to KL, Malaysia, and yes, I also carry around, long time ago, I also carry around my ledger. I put it in a small pocket, and put in my pack bag. And I left the whole thing at the hotel first floor, right? And luckily I found it again, but I almost think, oh my God, I need to run back to the hotel or find Wi-Fi so that I can be online and then reinstate. I still have the private key, etc. Reinstate it and transfer all the assets from the old wallet to a new wallet. But luckily I found it, and then so it resonated very well with me. I wanted to extend what you shared a little bit further before touching with Dias about so what is our vision for the next 5 years? Any details you can share for custodial services, especially for institutions?
The vision.
Yes, the vision.
So look, I think smart contract-based custody is going to remain a thing, especially in the DeFi side of things. We're doing some work on smart contract settlement, for instance, for smart contract-based settlement. The problem is that unless it's designed well, you get this concept of sort of on-chain commingling of funds. And institutions don't like it when their assets are commingled into accounts where other people's assets also exist. And so I feel like there's a little bit, I feel like something there, smart contract-based custody, but it's going to take some time. I think.
Is it really about the AML? Sorry, James, it's really about the AML. Like they don't want really to commingle with the monies. They don't really know where the source is for that. Is that something about, or is it's something different?
Yeah, no, definitely. And so, and that, by the way, doesn't just that problem doesn't just stay at the smart contract level, where it also exists at the any place where assets pool. So staking providers have the same issue. Like at the moment, it's permissionless to stake assets with stakers, or some of them. And so if you think about that, well, if you're a bad actor, I don't know, and you're able to stake anywhere, well, that's fine, you stake anywhere, but then that staking operator is actually now pooling good funds with bad, right? And so if you then try and withdraw your assets back, effectively your assets could be tainted. So I think that's a big part of it, Vin. So I'm cautiously bullish on that part of the DeFi world, but it just needs to solve some of these issues. Like, how do you stop AML related issues like that? I think one of the shorter term drivers of custody, just how I foresee it, sort of shaping the world, is the interoperability of custodians. So creating settlement networks, trading networks between each other, because ultimately, if you think about it, an institution wants to have the assets moving as little as possible, because each movement it increases the risk surface, right? So ideally, you have assets staying in one place forever, and then offer services from that one place where they stay, which is part of what Zodia Custody are trying to offer their clients as well. We can get into that a little later. And I think at scale, you're also able to see your TradFi assets with your digital assets, and then have platforms that are able to use both. So to use either as collateral to trade the other. I think that to me makes a lot of sense. And then of course, tokenization of real world assets, but we could talk about that on a whole different webinar, I think. So everyone probably can see the attraction of that. Probably too big to get into now.
Third edition of DBOE Forum. I can see that it's coming. Thanks.
Yeah, we can talk about DBOE for sure.
Third edition, yes. So we can dedicate one series for you to share the insight about that.
Yeah,
all right,
absolutely. Count me in.
Sure. Thank you, James. I will hold off my follow-up questions on this topic for now. I want to move on to Dias. Hello, Dias. I've known you since you came in as advisors for DBOE, almost like 2 years ago. I vividly remember the day when David, our tech lead, connected us over lunch, and we got to know each other more and more since then. And I have to say, we tremendously benefited from all the technical advice you shared with us so far. However, for today, I want to start off with a non-technical questions because it's really meant for the audience. Can you share with us what circumstances brought you into crypto and blockchain?
Yeah, sure. So, likewise, it was kind of nice to, go through with Debu all the technical stuff as well. It was fun. But maybe, yeah, like you said, I'll just talk about my story with blockchain. So for me, it started with like so I ventured into startups after getting out of my master's in Singapore, like around 2013. So at that point of time, startup engineering was not a thing. Like Node was just getting mature. Things were just getting mature. Docker was not a thing. so it was like, you're kind of thrust into the crypto world where you got to, into a startup world where you got to do everything from end to end technically, and you're not sure where to begin, kind of a thing. So, right on time, there was a course on Coursera. I'm a big fan of Coursera. So Coursera had this course called Startup Engineering by Balaji Srinivasan, and I think there was one more professor, but it was right on time because the criteria for clearing the course was that you needed to make a project with Bitcoin, and that's how you can pass the Coursera module. So I really enjoyed the startup engineering course because you get the whole cost of Dockerization and moving at scale and speed. So and I had to go buy some Bitcoin. So that's how the whole journey started, right? So for me, it was actually me venturing to study, and then as part of studying, I got to know more about blockchain and Bitcoin, and so suffice to say, I was just trying to finish the course and get my cert, and that's how I got into Bitcoin. But I also have some background, because I studied in the Middle East, and the kind of geopolitical tensions that you have there and you see now was also a huge driver, which kind of thrust me into it, because growing up, I saw a lot of information asymmetry. And so I kept questioning different things, and with crypto, sound money and stuff like this, it just kind of made sense. And I think all those factors put together is what really drove me into the Bitcoin space, yeah, or blockchain space, yeah.
Thank you, guys. You as a strong privacy advocate, may I know how old are you?
I got gray hair.
Okay. Yeah. So privacy is a broad concept, right? And I want to raise the questions in the space that DBOE is in right now, which is DeFi, for decentralization of finance. How do you see privacy in DeFi as of now? And I'm sure that blockchain technologies can be used to safeguard privacy, and at the same time, making sure that DeFi can still conform with regulations. But how is that possible, right? In layman's terms.
Yeah, so I just had the question on YouTube as well. I just kind of was trying to chat and answer that same kind of question. And James raised the same question, right? So he was talking about the tainting of coins because of bad actors in the system, right? So and one example there, right, is what I think is that it's a new primitive, right? Crypto is a new primitive, right? It's not something that was there before, and then so using solutions that that pre-existed on and I've tried that. I've gone down the road of trying pre-existing solutions and trying to rework it, and it has not really worked that well. And I think for me, the future of privacy is something again, building using the same ideas, but or using the same things, but creating new primitives or new inventions on the existing thing. And one of the inventions, or well, sort of invention for solving this particular problem that James was talking about, which is related to tainting, is the privacy pool paper that Vitalik put out. So James, I shared the link on YouTube, but I can send it to you later. So what one of the solutions to that problem, right, is you can create association sets. So let's say I know you, Vin, I know James, right? So we three come together and say, hey, we can put money into a pool, right? And we can prove that this money came from us. And when we take out the money, we can prove that I'm only going to take money that belonged to the three of us, right? So so like those are kind of solutions like using technology to enable privacy at the same time ensuring compliance, right? So you can prove that these tokens came from sources that are compliant, but at the same time being private by creating zero knowledge proofs that these are the Merkle tree of, or the data came from the sources that we are already a set of, right? And it's not coming from a third actor. Now, if a bad actor comes into that set, we can kind of say that, this bad actor is not part of our set, right? And what happens with that proof is that that bad actor is not able to participate in the DeFi protocol. So, and so for me, I think like creating like those kind of new solutions is probably one of the keys to actually unlocking, and working together with institutions. Yeah.
It's interesting though, isn't it? Because at heart, then that removes the permissionlessness from it, because ultimately, yes, you're creating then a separate pool, if you like, where you only invite your mates and your mates are all good. So I'm just playing devil's advocate. Like, what do you think about that?
So it's actually not. It is permissionless. It's just that you're kind of publicly saying that this, like, so everybody's free to create their own sets. It's permissionless, right, in that nature. But if you know that like you don't want to be associated with a particular set of users, you're free to create your own set. Or you can like, so if somebody's trying to purposefully taint you, you can say, hey, I have no part in this tainting part. Like this set of us is not part of that, right? They can do whatever else they want with their money, but don't like try to involve it with us, right? And to do that using what's available now, I think it's pretty like, I feel like that paper has not got enough solutions and attention that it deserves. So it is not that it becomes permissioned. There are some parts which have some semblance of permission nature, but it's not. It's still permissionless. Yeah, the solution put forth. Yeah, but I think like I don't want to go technical because I'm not sure how much. yeah.
We're trying to keep it high level, right?
yeah. I mean, of course, I'm happy to talk again about it, but yeah.
Sure. So yes, let me sidestep a little bit. Because I don't want to go into too technical. About SilverBullion, can you tell us a little bit more about the company and how is blockchain being used over there? If you guys are using.
Yeah, so it's actually interesting. So SilverBullion is like, so we have like a technical founder by the name of Gregor. So he's basically a developer himself. And then a lot of solutions that we do, it's just like some geek stuff, right? So one of the things that we do is we have gold, right? So like actual bullion. So we do it for institutions. And as well as private, individuals. So we store bullion like gold and silver, like bars. Now, what we do with blockchain is that we have a solution called GramChain, where what we do is it's like an event system. So whenever a bar of gold goes into the vault, we kind of like create an event saying that this bar of like 1 kilogram, whatever, has gone into the vault, and we kind of put that data, the metadata of it, we hash it, and then we store it on chain. Right. So what it means is like we also have, so it's like a Web 2.5 kind of, blockchain, or Web 2.5 kind of a system. So what we have there is like, we kind of encrypt the people who did it, like the vault operator, the security guard who signed it off, and things like that. And then all that information is like hashed and put onto chain, right? So if, like, for example, we try to move a bar, and people are welcome to come and kind of audit it. And we do have our own regular audits as well with the audit company, where you can see the data of what bars are there and all that. So it kind of becomes like a real-time auditing system, where you can see like what bars are moving in, what bars are going out, and things like this. So yeah, so it's called gramchain.net. Feel free to like check it out. Yeah, so that's, so other than that, what we do is, you can buy gold and bullion, silver with us, and then we just do regular like wealth management, and like, talk about how gold is a good, gold and precious metals are a good to have asset, like, as part of your wealth management, like, a certain percentage, like 5% or whatever. Yeah.
Wow, it's a very interesting use case here. So apart from pure crypto custody, which is James is pushing for greater adoptions, especially among institutions. I think we are seeing gold or precious metals. I think it's quite a typical example of real world asset tokenization, or RWA. That's a term for that as of now. Probably it's a new term as of now. How do you see the RWA then? Do you think it's, I just want to ask for the view, do you think it's become even a bigger thing and so the custody for it?
Yeah, so maybe I pick it up first. Yeah, so I think RWA, it is becoming bigger. Like we have I think last year when the bear market was there, one of the narratives was on RWA as well. So and a lot of projects that came out during that time was more related to treasury bills and related to TradeFi, right? So and RWA assets based out of that. I think there is still, I think James was saying as well, there's space for collateralization of real world assets, and the ability to kind of digitize, your real world assets so that you can use it on DeFi platforms. The other thing that I see there, which is kind of interesting, is also using primitives like streaming, right? Like James was saying, you don't want to see the things moving around too much. So for example, if somebody's having an LC where you're shipping the stuff from one country to the other, and it has to really reach there for the money to be move. But with crypto, you can as soon as the ship starts moving out, you can start streaming money and things like this. So you can have checkpoints, gated checkpoints, and so there's a lot of combinations of things that you can do once you will have more real world assets coming into the play.
Yeah, and look, we have some tokenization of real world assets already. We've had stable coins for quite some time. That's actually, fiat is traditional asset that's tokenized. Possibly the best use case of crypto so far in terms of assets stored. I mean, it's been staggeringly successful to a way of transferring value across the globe instantly in an asset that's stable. So I think that's obviously interesting. Recently, we've seen tokenized bonds already. Various banks doing pilot projects. That's also worked. Tokenized money markets. Those are already happening. And then you've got tokenized T-bills like Open Eden, with whom we have a partnership. That's all very exciting, and there are others. Look, I think what the average person, including myself, I call myself average person, of course, is interested in seeing is what about assets that I couldn't necessarily get hold of myself and give me economic ownership in those? Could I have a economic interest in the Shard, for instance, in London, or Burj Al Khalifa or the Mona Lisa? Can you tokenize assets that are otherwise unobtainable for me? Now, probably those three are unobtainable, but you get the idea. Give me access to an asset class that otherwise I wouldn't be able to touch. I think that's interesting, rather than tokenizing digital, traditional assets that might already have rails, but they'll be more efficient on digital asset rails for sure, but it's kind of already done. Give me an asset class I can't reach. That's exciting for me.
Thank you, James. I have a question since since the Bitcoin spot ETF being approved and it's live for almost a month, and it's stuck in my head, and I really want to exchange and hear the view as well. Do you think for a layman, the approval or the availability of that Bitcoin spot ETF, which is a regular share, do you think it's also kind of a proxy or substitution for custody solution, at least for layman manage the street?
Yeah, no,
or there are a lot more than that. Yeah.
Well, there are a lot more than that, but I think it's fair enough to say, in a word, yes, they are an alternative to a custody solution if you want to have Bitcoin. So, I mean, look, an ETF effectively acts as an aggregator for assets, whether it's a single asset, whether it's a fund, whatever it is. I mean, the product, if in order to exist, the product sponsor has to have agreements all over the place. So they have agreements with authorized participants. So these are the people that can create and redeem ETF shares, fund managers, the market makers, the transfer agents, the index providers. That was my previous job. Broker dealers, clearers, distributors, legal counsel, the whole thing, right? And of course, custodians. And so if you think of the US ETFs, that are actually ETPs. Again, topic for another time. But the US ETFs, I think all of them list Coinbase Trust as the custodian. Correct me if I'm wrong, but I'm pretty sure all of them work with Coinbase. There's a real problem with that. Like, okay, Coinbase Trust is secure and they're a huge name, and not investment advice, but I own some coin. It's a great company. I'm very impressed with what Brian Armstrong's built. But if you think about it, having all the ETFs in the US custodying with one custodian, well, that creates concentration risk that you might not be happy with. So now you've got billions of dollars sitting with one custodian, and you take one custodian out, then the entire product suite is gone. That's not great for users, and that's not great for the issuers either. And I'm pretty sure these are the kind of things that the issuers now are thinking like, yay, we got it done, we got the ETF out. Now how do I diversify? And so I think that's the next question. And some of the risk obviously involves insurance. So the key thing that a custodian does, a fully delegated custodian does, is keep assets safe, right? So it's got lots of different ways of storing your seed phrases, but that's what they do, right? And they have technology that helps them do that. But of course, there are risks across the whole range of technology solutions that are out there. I'd say it's very negligible, like infinitesimally small, but there are risks that a custodian could lose their assets, especially where they might be custodying the newer assets or ones that are perhaps slightly more technologically complex. In any case, if you think about them being insured, there's a finite amount of insurance available in the insurance industry for this kind of thing. Like it's not possible to fully match the total market cap of crypto with insurance that's available. So by definition, the custodians have less insurance coverage than they'd like and less than the assets that they have. So if there's a completely catastrophic loss by a custodian and they lost all of their assets, then the insurance will only cover a certain amount. And so another reason why one should probably diversify risks across. So yes, they are an alternative centralized custody solution. They do have risks. You don't ultimately have control over the asset yourself, right? You're trusting someone else to do that for you. But for the average person, it might be enough. It might be enough to say, I want some exposure to Bitcoin. I've bought the BlackRock ETF. I'm happy with that. I know what basic risks there are, and I'm happy to take them on.
Thank you, James. Yes, I did do some study myself as well. And when I read on Zodia website, I also see there are a lot of services, not just like custody, right? So I think one which is quite particularly interesting to me is Zodia staking, right? Is it DeFi staking? How does it work?
Yeah, so look, as I mentioned before, I think Zodia is trying to Zodia Custody is trying to do two things. It's trying to have your secure vault, but then it's also trying to give you connectivity and functionality from that vault, right? And connectivity means, can I access lots of different venues for trading from my secure vault? Or can I access lots of different products and services from my vault? So that's one of the things we've done. And so in order to do that, we launched basically like an app store called Gateway, and that has various categories right out of the box, and yield and staking and borrow lend are the categories that we have. And staking is obviously prominent in that, and we have great partnerships with Blockdaemon and TwinStake, who are our current list of stakers. But ultimately, it does function a bit like DeFi insofar as you delegate your assets to a staker. They do the staking, and then they transmit back the rewards minus a small fee for their services. So of course we have whitelisting and protections for our users to then access these providers, but we make sure that these providers are obviously highly curated and ring fenced and vetted before we enter into them. So while we do have other staking partners in mind, we have to make sure that we've done all of the requisite DD and testing, and make sure they stood the test of time and that sort of stuff. But of course, the dynamics of staking remain the same. We just have some extra checks and balances and some extra ways that we can make sure that our clients' assets are kept secure while doing that activity.
Thank you, James. Yes, this is particularly very interesting for us because I can see that the acceptance of DeFi among institutions, actually it's quite spreading, or at least I hope that. So I think moving on to part two, which is, I think we already touched upon it, already started part two, meaning I ask questions and you to share your own perspective, right? So it's more of a summary of what we discussed here and there in the part one. So I have a questions, which is really about adoption among institutions into the crypto and DeFi. So what are essential for higher adoptions, according to you? Yeah, maybe we start with James. Did you hear my questions?
So is it essential? Sorry.
Yeah. So basically, my question is really around adoption among institutions into crypto and into DeFi.
Yeah. So look, institutions coming into crypto and DeFi, bit of a double-edged sword. Not gonna lie. Right. So it really depends what your perspectives are. Now, crypto is one of the only sort of places in any kind of technology that I've seen so far whereby retail innovation actually led institutional innovation. Right. And so, Bitcoin was up until 2014 pretty much exclusively a retail phenomenon. And it still is very retail driven, and across crypto, it's very retail driven still. And so if you think about what the great innovations that have come out of crypto, you've obviously got Bitcoin, and then Ethereum was next for, decentralized computing, super interesting, but also things like perpetual futures, like great innovation that came out of crypto that I think eventually will find its way into TradFi as a way to create more effective risk transfer. Stable coins, we've talked on those before, and then of course defined risk options coming from somewhere near us, right? I think these are great innovations that I think will be taken on and are tremendously useful. So look, there's lots of reasons why we would want institutional participation, and not just because they can pump our bags, but there's some good reasons we like it. It brings regulatory clarity. It brings more market stability in theory, like more liquidity equals more stability. They have great pockets to do great research and R&D and development. That's quite interesting, and they will also help drive mainstream adoption. I think we've seen with the ETF. I think it will drive mom and pops to buy Bitcoin, and it will drive that conversation back home. So I think that's interesting. But then there's reasons why you don't like it, right? And obviously you've got that eternal centralization versus decentralization debate. Like DeFi, in its essence, is very pure in what it's trying to do, right? Allow banking like services like trading, accessible for anyone, right, with no restrictions. And so, TradFi does push a little bit against that. But also, I think, and this is where one has to be really careful, is that it is definitely true that TradFi firms, especially the big ones like BlackRock, have more ability to lobby regulation than any other group out there, which means that in order for them to capture the market share they want, and they might see DeFi as a competitive threat, like we might be at risk of sort of excessive regulatory capture here, whereby they effectively can strong-arm regulatory bodies to do what they want at the expense of their competitors, which in this case might be DeFi and that kind of thing. So double-edged sword, be careful what you wish for. And what's the other one we always have to say? Do your research, something like that.
That is our disclaimer, right? Darius, you have anything to add?
No, I think
James own perspective.
Sorry, can you guys still hear me? Yeah, good. Okay, so no, I think James covered pretty well. I mean, I'm not probably very good at where the institutions are heading to. I mean, if you ask me about are they putting money in gold, I could say some words about it. Yeah, but like, I just want to add, like, I think it's interesting to get that institutions coming in because it brings more stability to the space, and I think that's like it's good. I think there was a whole regulatory strong arming in the last year. We saw that like across countries. We had that in India, we had in China, we had like in the big countries especially. We had strong anti-crypto push, which was which is, I think, quite coordinated, if I'd like to say, right? So those are, I think, some factors that are kind of pushing that back. And I think the geopolitical nature of, like, where we are with, like, the US and China kind of facing off, I think those factors will actually probably, like, be more positive for crypto overall. And we're kind of like in a fractured world, and in a fractured world, I think something that everybody can trust has a place in it. And that's why I hope to see institutions actually adopting crypto, because if you can't trust this side, you can't trust that side, you can trust yourself, yourself, kind of a thing, right? So yeah, thanks.
Thank you, Darius and James. So moving on to the next questions, I think it's a little bit more technical here. Looking ahead, what trends and innovation do you foresee shaping the futures of custody solutions for institutions? And are there any emerging use cases or technologies we should be aware of that could redefine the institutional custody?
So I think I covered most of those earlier, Vin, actually. I think we talked about smart contract-based custody, self-custody, delegated securities, interoperability amongst custodians, integration with TradFi platforms, and tokenization of real-world assets. I think those are the big drivers. Since we've covered them already, I prefer to hand over to DS, perhaps, who might have some extra perspectives.
Okay, so I mean, maybe not extra perspective, but like I could just add on. So yeah, I think like I talked about streaming. I think one thing that I kind of find interesting is that we have a lot of encryption stuff coming up, which I think is becoming better and stronger. We have the whole AI narrative, but like we have like strong fully homomorphic encryption solutions coming up. Like 6 to 8 years back, that was like kind of impossible, but now it's getting better. It's still slow. There are a few and why that is related is because you like the example with the zero knowledge proofs and privacy pools. So you have these kind of like new security and encryption primitives that are becoming like, it was possible, but it's really slow. But these things are becoming better and faster, and you can avoid some stuff, like you can avoid MEV, right, the minor extraction of value, and things like that, that makes things more transparent in the blockchain space. And I think that's something that we need to look out for. Yeah, I think that's about it for me.
Can I ask you a dumb question, Darius, which is about account abstraction? Do you think it solves a number of the things James mentioned? I know I think it's more meant for retails, but do you think it's also it solves quite a bit of issues for custody?
Yeah, I think account abstraction is really a game changer, because like you have like a Web2 kind of a flow, right? Which I think, so I made some apps using account abstraction as well, and when I show it to people, it's so much easier to explain how it works, because people like the stuff on the blockchain hidden and under the hood. So for example, there's a project called Materium, right? So Materium, what they do is they create real world legal documents, common law, English common law. So they're based off London. They create like like they take like legal arbitrary terms and put it into a NFT that covers like a real estate property, right? But like for a user to understand all that and go through all that and create click and like sign, it's just like I don't see it actually working out. But something like account abstraction, where they just know that this happens, and then it's just a click through. I think that's a really big game changer, because so with account abstraction, what happens is I can like create a transaction on your behalf, like after you sign it off, right? So that was not possible before. And I can broadcast the transaction for you. So as a user, everything kind of happens under the hood. Of course, the UI can like make sure that you get all the detailed information. But as far as I've shown it to people, like I did one project using account abstraction, and like it's like I always have the difficulty in explaining how it works. But like with account abstraction, it becomes like, okay, you get it, like you click, and then it's done, right? And so I think it's a big game changer in terms of explaining the UX to a layman, and I think that really helps. Yeah.
Well, thanks, Darius and James. My last question is for part 2, which is I hope it's more give us some more fun, which is about the price of BTC. What is your most educated guess about the price of BTC by the end of 2024, right? Please.
I'll go first. So we've had a bullish event, which was the ETF. I think US big market, biggest market in the world, certainly of eligible buying. I think that the way that the immediate price action played out was certainly sort of looked like a sell the news type event. However, it takes time for market forces to really kick in, especially where there's a new product. And so if you look at the analog that I always used when sort of trying to model out how Bitcoin would grow once it had an ETF was the gold ETF. I think it launched in 2004. And after its launch, there was just a steady growth of price appreciation, gold. And as more and more people could buy it, you know, the advisor network kicked in. All of the different brokers started offering it, and these things aren't just, you know, in some cases they're turned on overnight, but in many cases they're not, right? And so I think you'll have this slow crescendoing in buying of BTC over this year, that's just driven by the ETF as more people want to own it, and obviously the price move upwards might then fuel it further. I think also you've got the halving in April coming up, another structurally important driver, perhaps getting less important in terms of significance with every year, because obviously the amount issued in a relative perspective is dwindling versus what's already out there, right? So it has less impact on market forces. However, humans are in some ways quite simple animals, and we do love a pattern, and we've seen a pattern for the last 5 times, and we probably expect it to go on. So look, I think we'll be through all-time highs. I think we'll be around the $90,000 mark by the end of the year.
Okay, so I'm a noob when it comes to predicting prices, so I'm just going to go with James. I mean, I think we have the US elections and stuff coming up, so you know.
We do, yeah.
Yeah, so I kind of just agree.
Yeah. Look, I not financial advice, and these predictions never right. So, but as long as you've got a framework for decision making, I think more usefully for your users, like have a reason why you think something's going to go somewhere, rather than just sort of listening to say, well, James Harris at Zodia Custody thinks it's going to be 90,000. James Harris is almost certainly wrong, right? And if I change my mind, what are you going to do? Because you're not going to know. I might not broadcast the fact that I've changed my mind. So I think what's really important is like have a framework, have a reason why you think something's going to get there, and be then willing to challenge your own views and say, actually, I'm right about that, or I'm wrong about that, as the market progresses. Because everything that we know about Bitcoin's currently in the price, right? And what we don't know starts from now and tomorrow. Like we don't know what's going to happen. So just be careful out there. But structurally interesting times to be in digital assets for sure.
Well, about reasoning framework, I would like to jump in as well. I am very optimistic about Bitcoin in terms of price performance, as we too do. But I also encourage everyone to have a hedge. By hedge, I mean like insurance. It's asymmetric as part of the plan, right? What it means is the downside is protected, but the upside remains. It doesn't mean like I advise you to exit the positions where we have no risk. An option is very feasible solution, and you know what I mean. Moving on to part 3, questions from audience. I just have a quick look on our YouTube live stream. I saw a bunch of questions, but since I think we are running out of time, only 2 minutes, I think we exceeded about 40 minutes already. So I think we don't have time for questions from audience. I'm really sorry about that. And this marks the end of our session. Thank you all for joining our second DBOE forum. Special thanks to James and Darius for being with us today.
If you want to email us some of the questions, I'm very happy to tackle them if there are any for me, and I'll email them over and you can send them out. That's
we
cool.
can do that.
Yeah.
Yes, after the meeting.
Likewise, yeah.
Sure.
So special thanks to James and Darius for being with us today. It's another milestone as we close out 2023 and welcome 2024, all in lunar calendar terms. Exciting time ahead. Wishing everyone a happy Lunar New Year. Thank you very much again.
Thanks so much for having us.
Yeah, thank you.
Bye. Bye, everyone.
Bye.